Hey everyone, and welcome back to Wealthy Brains. An individual who made his career as a forecaster of trends for the SU economy will often have insights on precious metals. Gerald Celente is one such individual who keeps close tabs on all industries. His recent predictions on gold are also worth taking note of. Who is Gerald Celente? Celente was born in an Italian-American family in the Bronx, New York City. He had early political experience running a mayoral campaign in Yonkers, New York, and served as executive assistant to the Secretary of the New York State Senate. From 1973 to 1979, Celente traveled between the major U.S. cities of Chicago, Illinois, and Washington, D.C. as a government affairs specialist. In 1980, Celente founded the Trends Research Institute, now located in Kingston, New York, publisher of the Trends Journal, which forecasts and analyzes business, socioeconomic, political, and other trends. In the finance industry, the name Gerald Celente will ring a bell for many people. He is an active American trend forecaster and business consultant. All of this stems forth from his early political experience running a mayoral campaign in Yonkers. He also traveled between major U.S. cities as a government affairs specialist until 1979. As of 1980, Celente founded the Trends Research Institute. Eventually, this also became the home of the Trends Journal, which forecasts and analyzes the American economy and its corporations. The magazine also pays close attention to socioeconomic, political, and other trends that might impact the economy in the short or long term. Over the years, Gerald also published 3 different books. His first, titled Trend Tracking: System to Profit from Today's Trends, proved very successful over the years. Book number 2, called Trends 2000: How to Prepare for and Profit from the Changes of the 21st Century, still holds a lot of value today. His third book covers an entirely different topic, yet it depicts an interesting story about the soul of America in the modern age. Gerald Celente's forecasting. Being a trend forecaster is not as easy as it may seem at first. It requires vast knowledge of past, current, and future events. Anything and everything can make markets move in a specific direction. Preparing for what the future may hold is crucial as a forecaster, and Celente has been able to do exactly that. Unlike what some may expect, not all forecasts have been about finances directly. Celente has warned about terrorism, war, and economic collapses alike. Over the years, Celente also grew more outspoken about the influence of Wall Street. He even claimed how Wall Street controls people's financial lives and the media manipulates the minds. Gerald fears that the existing systems will bankrupt the country, a vision that may not be that unlikely to come true either. With a 40-year track record of identifying, tracking, and forecasting trends, Celente is world-renowned as today's #1 trend forecaster. He is the author of Trends 2000 and publisher of the Trends Journal found at trendsresearch.com, which provides some of the most accurate, timely, and comprehensive forecasts available today. Unencumbered by political dogma, rigid ideology, or conventional wisdom, Celente, whose motto is "Think for yourself," observes and analyzes the current events, forming future trends for what they are, not for the way he wants them to be. Interest rate cuts across the globe, growing expectations of a U.S. recession, intensifying geopolitical tensions. This is not an ideal scenario, except perhaps for gold. All those issues are pushing gold prices higher as the optimal safe haven asset takes on greater appeal with investors. After solidifying at over $1,450 per ounce during the last few weeks, gold is on track at spike higher than $2,000, predicts Gerald Celente. Further, the greatest depression ever is coming soon, far worse than the Great Depression of the 1930s, and a potential war in the Middle East will trigger World War III for sure, he predicts. Founder of Trends Research Institute, publisher of Trends Journal, Celente, 72, accurately called Donald Trump's election the Trump market rally, the dot-com debacle, and Black Monday. Though critics charge that his forecasts are chiefly derived from intuition, the trends detector insists he assiduously studies a wide range of global government, business, and political data and statistics on which he bases his predictions. Consultant to industry and government and a popular keynote speaker, Celente has been forecasting a gold bull run for 6 years now, contingent on gold's reaching $1,450 an ounce, when it would be poised for new highs. Think Advisor recently spoke with Celente from his office in Kingston, New York. As an individual investor, he deploys funds to gold and real estate only. In 1978, he bought his first gold bars for $187.50 per ounce. Here are the highlights of this conversation. Think Advisor. Has the yield curve inversion led more people to invest in gold? Gerald. Yes, because they have nowhere to put their money. 10, 20, and 30-year bond yields are in negative territory. People who don't want to get negative interest rates are gambling in the gold market. The central banks increased their gold buying last year at the highest rate in 50 years. What's gold's downside risk right now? He said. At the very worst, it would go to around $1,400, which is really nothing in the futures market. As we speak, it's $1,504. It's been solid for weeks, so the downside risk is minimal, and the upside is very strong. I've been saying for 6 years that gold had to break about $1,450 an ounce for it to gain real strength. It's hit toward the 2000 market, and it's going to keep going. Where are the risk factors? The major one is that the global economy gets really strong, currencies regain their value, and people are happy with investing in securities markets. So the stronger the dollar the economy gets, the weaker gold goes. But the equity markets have peaked. I've said this for 5 months now. They've had their best day. Why are interest rate cuts positive for gold investing? Because the dollar is getting cheaper relative to other currencies. This year already, 30 central banks in Iran, India, and Mexico have lowered their interest rates. They're all in trouble. They need money. The central bank in Germany, the strongest economy in Europe, just warned that they're going into recession. They're going to keep printing more money, but the money is valueless. The only reason the US dollar is staying so strong is that the other are so weak. What does the price of oil have to do with gold? A lot. If war breaks out in the Middle East, you're going to see oil prices spike above $100 a barrel. That will bring down the global economy and equity markets, and it will be the beginning of the World War III. When do you think the market will crash? It could happen anytime. You can't predict it. There are too many wild cards. Two are India and what's going on in Hong Kong, which is needed to do business in Asia. But now it's under threat. This is very serious, and if anyone thinks the Chinese aren't going to overpower 7 million people from Hong Kong, they'd better grow up. Your only other investing is in real estate, correct? Yes, I own property. I don't have the mental capacity to play the security markets. It's not my strength. I don't know how to play those markets. People are making a lot more there than I am, so I don't knock it. I'm just saying it's not my forte, but the equity market's best days are gone for a while. That is all for today, folks. Would you like to add anything? Let us know in the comment section. If you enjoyed this video, then be sure to leave a like and subscribe if you are new. And I'll see you all in the next video.